Hey guys, welcome back to another week of Mortgage Matters in Minutes. This is your host, Brent Rasmussen, owner of Mortgage Specialists. This week, we're continuing our conversations. We've had many calls throughout the last few weeks here of, do I need money or what does it cost to refinance my property? Do I need a down payment? Do I need to pay extra funds? What's the scenario here in regards to refinancing? So many of you that are looking at refinancing right now might have only had your loan a short period of time, 6 months, 12 months, 18 months, 2 years, something like that. So what we look at when we're talking about refinancing is obviously having to pay closing costs and set up an escrow account again. So what do people do with those extra monies that are being charged to them? It's different. But what I will tell you is most of all the refinances we look at, we're able to put those closing costs and prepaids back into your loan amount. Not always can we do that. It depends on how your home has appreciated and how much you've paid down on your loan. Some people have made extra payments throughout time and some people have not. So we look at that scenario to see, what do you owe? What is it worth? But in order to refinance, the answer is you do not have to come up with money to closing as long as we can structure the loan accordingly. So most of the time we look at that right away and say, what do we feel the value is? Let's be realistic, because generally on many refinances, you're going to need an appraisal. And we're going to base the loan as a percentage off that appraisal because that is how the rules are set. Generally speaking, you're not going to be able to borrow much more than about 95 or 97% of the home's value. And that would be more on a conventional loan, and FHA and VA are very similar. But I can also suggest that FHA and VA loans have special streamline refinances that if you've been making your payments on time for the last 12 months, they don't have to go through the full underwrite verification process. And we might not necessarily need an appraisal. Similar to that of conventional loans, if you have a property with 20% equity, we may be able to get out of the appraisal. The main question people have in all of this is, what truly is the cost? And I would say here in the Omaha area, closing costs are going to range somewhere between $2,500 and $3,500. Just depends on what you owe, what kind of loan you're doing. That's a big window. So maybe $2,000 to $4,000 is kind of a big range. That might continue to go up over time when this video, archives itself. But here in 2025, that's kind of the true window of whether you need to pay for an appraisal, underwriting fee, title fees. Every time you do a new loan, they're going to go through the full entire process of verifying everything. Unless we look at a possible FHA or VA streamline refinance, and then the closing costs are significantly less, and they don't let you to increase your loan so large of an amount as well too. Many times when we're looking at refinancing, people want to maybe consolidate their bills as well too, which is a different kind of loan. But generally, when we're looking at doing a refinance, we're able to get all of the loan costs into the loan, and or a consumer will bring in maybe their mortgage payment or two to cover those costs because they don't want their loan increasing over time. Not every refinance is the same. Not everyone gets the same interest rate. Not everyone gets the exact same type of loan. There's pros and cons to everything that we do, but I can share with you per our last video, we analyze the loan to make sure it makes financial sense for you to refinance before you just go ahead and do it. I can tell you there's a lot of lenders out there that will push and pry and con you into refinancing, even though it might not make financial sense. Every time someone does a loan, someone makes money. So if there's money involved, sometimes they're not going to put your best interest in line. And we talked about what that break even is. So here in summary, real quickly, again, interest rates are coming down. We're seeing people connect and contact and start looking at refinancing. And if it makes sense, great. If it doesn't, we will still continue to monitor things and watch things for you. So if the rates do continue to come down, maybe 6 months, a year, 2 years down the road, refinance may make sense. Hope you learned a little bit here today. You can reach out to us anytime at 402-991-5153 or check us out on our website at mtg-specialists.com. Have a great rest of your day. Mortgage Specialists. Driven, trusted, reliable.